Important day. GDP print is going to be out this evening, plus you have the RBI press conference as well at 5 o'clock. So a lot that would be brewing on the macro front. As for the Bloomberg reports, GDP is expected to grow at a strong pace of around 7%. And this expansion may come in despite the mixed signals that you've seen from the financial markets is what the report is indicating. Let me get in Aditi Nayar, Chief Economist at ICRA. Aditi, good afternoon and welcome to the show here on the side. Always a pleasure to speak to you and good to have you as well after really long. My question to you is, first up, your expectations in terms of the key print today and what should you be watching out for?
Thank you so much. Always a pleasure to speak with you. So today, as you said, is a very important day. We have the Q2 GDP growth print which is coming out, and our expectation is that it is going to come in at a robust 7%. Although this is going to be a slower pace than the 7.8% that we got in Q1 of this year. And you're right, there are conflicting signals. I think all the data has not pointed in the same direction. It was an interesting quarter, with the monsoon the way that it was, with excess rainfall at the end, and a lot of turbulence caused by the US tariffs, a lot of uncertainties related to that. And then, of course, we got the GST announcement in the middle of the quarter and a very quick implementation after that at the start of the festive season. So lots of mixed cues. I think two of the reasons that we were expecting to see the growth print slowing down from Q1 to Q2. One is that the pace of government spending itself slowed down on an elevated base, so that's one reason. And then the tariff-related uncertainty, and very specifically, we also saw the growth in services exports slowing down, so that's probably going to play another factor. However, with the GST-related positivity, with the restocking ahead of the festive season, the manufacturing volume growth did improve. And we expect that this quarter, actually, industrial GVA growth is going to outpace services after a few quarters. And that industrial GVA growth is going to come in at a 5-quarter high.
Okay. Aditi, hi. Good afternoon. Alex here. I want to actually ask from the perspective of corporates, because a lot of people tuning in now more concerned about corporate earnings and the implications of the inflation print that we've seen in the recent past, what that means for nominal GDP and the projections for this year, because you have corporate earnings that would be tied to that. What are your own projections for FY26? And do you see it improving heading into FY27? And also, what are you factoring as far as the rate cuts go? Because you have one just in a couple of weeks, actually next week. Yeah.
So on the nominal GDP side, both for Q2 and for Q3, the deflators are going to be very, very low, because we have WPI that's marginal and we have the CPI inflation that is also extremely low at this point in time. So there will be a very low gap between the nominal and the real GDP growth in Q2 and in Q3. And then from Q4 onwards, as the inflation trends normalize, particularly for the CPI, we'll see the deflators starting to head back to relatively normal levels. So for FY26 as a whole, we're looking at a real GDP growth of around 6.8% and a nominal GDP growth of maybe around 8.2 to 8.5%. So certainly lower than what we usually, what we expect for the Indian economy. For FY27, as of now, growth could print in a pretty wide range. I'm just going to say 6.5%, as an anchor. Obviously, what happens with things like the US tariffs on both goods and on services would have an impact on where growth ends up. But I'm going to use 6.5% as an anchor for the real GDP growth for FY27 for now. We would expect the CPI inflation to head upwards of 4% and average around 4.2%, 4.3% in FY27, particularly given that the base is going to be quite low. The WPI inflation may still be in the range of 2 to 3% only. So for next year, definitely the nominal GDP growth would be a bit higher than what it is in FY26. But generally speaking, I mean, if we're going to end up with inflation that's on the lower side, and if real GDP growth is going to be in the 6.5 to 7% mark, then nominal GDP will not necessarily be in double digits in all years.
Aditi, this is Sharad here. We spoke about a lot of consumption also kicking in, especially with the festive season. Also, one question is the rate of transmission. How has actually gone down in the ecosystem, because RBI has stated that October, November will be the best time where you'll have all your economic data saying that the consumption is going to pick up, your interest rates are going to come down, and the transmission will happen. So will we see that inflection point happening in the coming months?
See, on the consumption side, I think, it's not going to be a one-size-fits-all answer. What we saw with the GST rationalization at the beginning of the festive season was that you got this big boost towards, consumer durables. We saw a lot of white goods seeing very high demand. We also saw some amount of pent-up demand coming through in the auto sector. And I think that for some sectors, you will see a trend of restocking that will continue through the rest of Q3, but maybe not for all sectors. So for the auto sector, for instance, where the inventory levels were very, very high, we may not see that same trend of restocking coming through the way that it would for other white goods. So it's going to be a bit of a mixed bag in terms of what kind of volume growth sustains across different sectors. I would think that after the kind of concentrated demand that we've seen in the festive season, in any case, there will be a little bit of a lull in terms of big ticket spending in the rest of this quarter, and then maybe things will normalize in Q4. For consumer non-durables, I think it's going to be a little bit of a different trajectory. The initial impact of the GST cuts was probably felt more on the durable side. But on the non-durable side, I think the benefit is probably going to start showing up a little bit later. Once households sort of, relook at their household budgets and how much their normal, purchases cost, possibly the savings, once they start to become more apparent, you could see a trend of either higher volumes or premiumization through a lot of categories.
Got it. All right. Aditi, thanks so much for setting that up for us. An absolute pleasure as always speaking with you.
Thank you.
Now we have to slip in a very quick break, but before we do, take a look at this. The new kid on the block.